Evaluating high-yield savings options requires a close look at what digital financial institutions offer compared to traditional brick-and-mortar locations. Peak Bank has drawn attention for providing competitive annual percentage yields through its Envision high-yield savings account, prompting many savers to reconsider where they store their cash. Understanding whether these specific rates are truly worth your money involves looking past the initial promotional numbers and examining the actual structure of the account. Peak Bank operates primarily as an online banking option backed by Idaho First Bank, allowing them to pass savings onto consumers in the form of higher yields. Their flagship savings product routinely floats competitive rates, such as 4.01% APY, which sits comfortably above the national average for standard traditional savings accounts. Opening an account requires a modest minimum deposit of $100, making it accessible for people who are just beginning their savings journey or looking to split up their emergency funds. There are also no monthly maintenance fees eating away at your accumulated interest, which is a crucial baseline requirement for any modern high-yield account. However, high APYs never tell the whole story of how a bank operates on a day-to-day basis. One major factor to consider with Peak Bank is the tier structure and accessibility of your funds. While the top-tier yields apply smoothly across standard balances up to hundreds of thousands of dollars, any shifts in broader economic federal interest rates mean these variable rates can adjust downward without extensive advance warning. Another practical limitation involves daily banking logistics. Peak Bank focuses heavily on consumer savings and certificates of deposit rather than everyday checking services. The savings accounts do not come equipped with traditional ATM cards, physical check-writing capabilities, or seamless outgoing wire transfer features built right into a daily debit interface. Moving money usually requires standard electronic ACH transfers linked to an external checking account at another institution, which can take a few business days to clear. For savers who prioritize maximum yield and do not need immediate, constant touchpoints to their cash for daily spending, these limitations matter very little. An emergency fund or a house down payment fund sitting undisturbed can benefit greatly from an above-average yield without monthly fees nibbling at the principal balance. On the flip side, anyone who prefers having all their financial tools, checking, debit card spending, fast cash machine access, and savings under one single digital roof might find the separation frustrating. Deciding if Peak Bank rates are worth it ultimately depends on your personal financial routine. If your current bank offers a near 0% return on your hard-earned savings, moving that cash to a higher-yielding digital alternative like Peak Bank can yield tangible monetary growth over the course of a year. Weighing the chase for a fraction of a percent against the convenience of your current financial setup will point you toward the right choice for your money.